afternoon, everyone. Scott Henderson, shooter. And hey, we are going to go over swing trade notes. This is our weekly recap where we cover existing positions, setups and alerts that we may have thrown out there, etc. Please do review our disclosures at the end of this presentation. Now, Elliott Wave Absolute is a great tool if it is accurate on its wave count. Though I question whether this is accurate. And, I've probably said this till I'm blue in the face at this point, but my impression at this point is that this is peaking drive 1. So that means we're going to get second and a third, or what I perceive as what that, I think is going to be sort of a meandering, rolling over kind of wave. So this is 1 in my book. Now, the question is, have we put in our 2, or is our 2 going to come down here and then we go? But in either case, I think we have a similar roll to this. So, this is probably a flat top. So this is probably a clean consolidation zone. And that is probably what we're going to see based on how the market is reacting. Now, bringing in the macro and the micro and the historical aspect of what happens in December and January, I think is very important here. We almost always rally the first couple of weeks of January because everybody comes off the Christmas holiday, and unless they had a horrible holiday, it's a time to buy because, a lot of the funds and the trade desks have trimmed really to ensure their bonuses in year end. So when they come back that January 1st week, they're chomping at the bit to buy. And that's why we see that euphoria. So we have that FOMO that is pretty much insured that first couple of weeks. Now, after the third week, things change. So structurally, if we stay shallow here, this becomes very impulsive, which is what I really wanted to point out. Then we should maintain this slope that we have, or maybe somewhere in the middle. And, that's something that, obviously if you throw up a Bollinger Band, I won't do here because of time constraints today, but you throw up a regular Bollinger Band with fibs on there and look at the second and the third standard deviation. We're not even close to the second standard deviation on this pullback. We won't get there till we come back to about 613. So structurally, that's the way I think it plays out. I don't think we test these shelves. I mean, we need some more things to cave. Obviously, we have some catalysts that are there. One of the biggest one is the BOJ unwinding their equities and ETF positions. However, it's small enough where it's more like they're making a statement like, oh yeah, we're trimming, but it's going to take 117 years for us to sell it all. So how big really is it? It's really insignificant to the grand scheme of things, other than the headline news that is going to motivate some. So that's my thought currently on the SPY. All right, now let's look at the NASDAQ. Similar look. I mean, I'm just looking at this continuing to pump. The question is how aggressive and how euphoric AI actually gets. Now we're starting to see some ripples. I was reading an article earlier today on quantum computing, and apparently Google has made a huge breakthrough. Now, I don't know exactly how that flushes down into CapEx, but there's a lot of good things that we see, even with the inflation pressures that we've just gone through, even with the shakeout in tech jobs, specifically computer science type degrees, we're developing new careers that revolve around AI. And if you look at the list, just look at what Tesla's hiring. They have nearly 5,000 open positions they're trying to fill, and they're good paying job. The White House just launched a new tech sector where they're trying to jump into crypto and also an AI infrastructure internally. So they're trying to build away from their current suppliers. So they're independent of the private companies. And that has just started. So we see this migration to these new careers and realize that's going to land right here on the NASDAQ. And I think our whales, the ones with the biggest moat, are going to be the ones that survive. And as I map out my thinking and my plan, the way I see this structurally is first what I published this week as far as metals. Metals is the foundation. That's what builds everything. So the phase into that positioning is 6 months to 3 years out for metals. So we're thinking both short term and longer term. And there's some things that, we really don't want to buy right now, but we probably should have a piece of, like, for example, gold or silver, because right now it's doing exactly what it should do with the level of the national debt that we have, et cetera. And then I'm going to migrate into a AI infrastructure format or model. And these are things that I've been working on and toying with and tweaking with AI, actually 3 different AI large language models at this point, because I like having their sort of like a think tank approach by putting more models into one place and asking them the same question and getting them to argue about the topic. I just find absolutely intriguing and fun. So I've spent a little time with that, and you guys see the results on the front end of that. And obviously put your input. If you like something or don't like something or have a suggestion, hey, jump on board. That's sort of my thought here. So I think the NASDAQ stays elevated. We don't have any concern for a breakdown until we close below 539.92, till this shelf is broken. I don't think that's the case. I think this is a new impulse. And I think I'm being extremely conservative, because realize the slope is this. If this is mound one, that was our trough, this is our peak, and that's our next trough. Realize the distance between that low and this low is ultimately where we should put in our wave up here for the completion of this impulse. So we're looking at least 800, 825. And, it could take, one thing about Elliott wave or FOMO or fear, there's really no time constraints to how we want to drill down there. We can look at the historical aspect of the indexes, but the big change from an index versus an independent stock is that the indexes switch out and they rotate. So there are names that are taking off on the list and names that are added to the list. So it's not like going out and buying DuPont, as an example, where we can look back to the beginning of time in the stock market and we can track its whole history based on different moments in time, that we have towards, price and how FOMO applied and how fear of loss applied. And when I say that, FOMO is when we fear missing out on a trade is usually at a top. So there were a lot of people who bought right here and caught this whole heat, because that's how the psychology works when we buy and sell things like stock. And that really is where I've specialized as far as that focus. So let me just jump into some names here. I want to go over what is in my current version of Swing Trade Notes, what names I have on my hot sheet, and you go through that, and then we will get to the list of requests that we have. And only because I'm juggling things, it's how it is. Okay, Royal Caribbean Cruise Line. I like the look of this. It looks really euphoric. We've just started to move. Now, could it be a dead cat bounce here? Yeah, it could. Okay. However, history speaks, really about the cruise line industry. We have Carnival Cruise Lines. If I believe they report Thursday, if they miss, then I'm probably going to get clobbered on this trade. And right now, it's my largest common share position. But the main reason is I like the euphoria of this chart. I like how impulsive it is coming off, how impulsive it has been back to the upside, and how cleanly the institutions and the trade desks are buying this. I mean, you can just see cleanly where they're jumping on board in these legs. And we've started to do that. So the call to get on board back down here at roughly $272 was spot on. It's just a risk management trade at this point. So I expect that to continue. I would say that this is our first mound. We're just doing our first peaking drive and our second mound. So being frank, I mean, we could end up close to $500 on this if we have any kind of consumer traffic go back into travel or cruise lines, et cetera. And we're already starting to see that in some other areas. Hotel bookings are up, et cetera. All right, let's look at Bros. Now, this is another decent position size that I have here. Similar look, but not quite as aggressive. I like the cleanliness of this ABC structure as far as the corrective leg. I think it's got a lot of upside. Not only that, it's busier than Starbucks. I can't get out of there in less than 20 minutes. I mean, Starbucks, I can get out in about 8 or 10 minutes, but Bros, I can't get it 20 minutes. Sometimes it's 40 minutes and I leave. But, so we have this flag, a larger flag look. So if we look at this just from a bigger ABC structure, this is kind of how my visual looks. So if we come in here and this is our ABC and all we're doing is looking for equality, this is $100 stock tomorrow. Not tomorrow, but in a reasonable period of time. All right, let's jump back to eat. Now, I did a consumer sector article about restaurants, and each is one of them that's just a beautiful look. Perfect flagpole, perfect flag. This is peaking drive 1, right? So equality would give us peaking drive 2 up here around 210, and peaking drive 3 could push all the way up to about $260. So that's, sort of my thought on that. But let me put a wave here on it just so you guys get a visual quick light. So this would be one, and I'm not throwing fibs up here only for time constraints today, but that's structurally how our wave would look. We're going to see resistance here. I would expect some consolidation right there maybe first, so probably not till about 173. All right, let's look at MORN. Now, I like this just because of this corrective leg. I mean, at this point, it fails. In other words, I'm wrong. We closed below 203. We're just consolidating nice here. I also like the fact that our RSI structure is pretty solid. So this was our confirming low, and we have a divergent low after this much of an impulsive leg. And if we go back and look at the history of this thing likes to do that. It likes to have these huge runs and these huge drawdowns. And what does this look like? This huge drawdown. So either I'm wrong and we're here, right? And we're going to get a little bit of a back test and we get that overshoot. Not usually the case, but it could still be. So my position sizing is with that in mind. I'm looking at this internal trend support from where our peak was from 2018 all the way back. If we come here and we just draw a wick off of this, that is my confirming trend support. Now, what I'd like to point out is notice how tight we've tested this, and it held on our push back to the upside, and it held on our push back to the upside. So I think worst case scenario, I end down here. So again, back to my position sizing and how I'm strategically trying to get into a position. I really want a full position size right here. My toe's in the water because I like what it looks like here. It looks to me like a bottom is forming. So if I'm right, I don't want to miss it. So that's the challenging part when we start seeing a bottom is, are we right? Are we wrong? How much do I really want to risk? But if I'm right, I would think we do something like this back to the upside. If I'm wrong, I'm just early and we do it back down here. So structurally, I'm thinking of it this way. My cost basis, I'm looking at 212. Maybe I'll add a little more at 192. And then my final shot is at 175. But this trend line break. Now realize, anytime we tag a line, Flushing drive 1, Flushing drive 2, Flushing drive 3. Realize drive 3 in all circumstances can be an overshoot. So that is also on my mind as I'm looking. All right, let's take a look at L. Now, I probably was a little early. I took a little heat on this, but it's still done nothing wrong. Very similar look as far as the retrace and how euphoric it is. Not only that, it's a staple. I think it does really well around the holidays, if my memory serves me correct. So I'm looking at this as an ABC structure that is an impulse. And let me just finish drawing this and I'll come in here. So the ABC is internal as far as this leg. Now, that often happens in wave 1, by the way. So you don't get a full impulse leg yet. However, what I like about this ABC is you have this elongated or extended A versus what C has become there. So what we did is we had this euphoria come in at WAND, one more pop. They tried to keep running with it. They failed. Institutions exited here. But notice the structure that we have here. So right here, about 59 bucks is where the institutions had a really significant interest. And, the MO tends to rhyme in a tape. So we have this band right here where the buyers show up, which is really why I like this look here, because I do think that's where we are. And then we're looking for that upside. Obviously, we break below this low, roughly at 68 bucks. Risk management, the name of the game. I'm not recalling who posted it in chat, but I posted a response there. Realize I use a strategic way to enter a position, and then it comes down to risk management. So how I choose to hold a position. That's why I want to make sure I have both sides of the tape mapped. I want to have my game plan. Yeah, hey, it works. When do I add? How do I add? Like, for example, if you notice in chat, I added to a few names today, 10%, but I also trimmed 2 positions by 50% because I didn't like the risk those positions presented going into year end. But that type of risk management and trimming and position size, I do it strategically. Pretty much I do it on Wednesdays and I do it on Friday because I found that just works for me time-wise. And then as I get that repetitive process going, I just look at the list of names that I'm holding and then say, okay, where am I at? I look at what my triggers are. I look at my alerts, decide whether or not I'm holding as I'm standing or I'm trimming. But in this case, I want to build a position in ELF because I do think we're here. The question is, am I going to end up having to add back at 54, 55 bucks, which still we don't know. So let's jump and go to ACN. I believe they have earnings tomorrow. And I know there was a question. Right now, it's done nothing wrong. It looks to me, honestly, what this tape looks like is that it's going to beat. And notice that we have one count way the heck up here at $450 with Luxal. Now, usually when Luxal consolidates on its opinion on where we go, it's usually right. That's one thing I have. So if I get below this 259, I will probably cut my position. So this general candle, 50% of it gets taken out. This is a failed rally. It is a dead cat bounce. That's sort of my view here. But right now, it's done nothing wrong. I don't have a large enough position size on to sell covered calls into earnings. If I did, I would, but I did not add to this position. All right, let's look at UPS. And I'm not going to pick on you about UPS. I won't mention names. I don't think UPS is dead. You know, I posted in chat, there are generals in our economy. Unless the U.S. just dies and we stop our productive capacity, there are certain companies that, regardless of whether they do well today or do horrible tomorrow, are going to get bought. UPS is one of those stocks. Micron is one of those stocks. John Deere is one of those stocks. So the question is, when do we get like here where we get really excited because the institutions come back in? Well, we already know. Right here, once we get back above 124, the institutions are clearly going to be aggressive based on the tape. And if you look back at the history of all this consolidation that occurred, we've been in a very euphoric period with UPS, and then it pulled back. And I think what really is hit here is Amazon. I think Amazon is playing a big problem here. But one thing I have noticed this holiday season, Amazon is struggling with package delivery. They have their reps on the side of the road at McDonald's and at Walmart shuffling trucks of packages because their mass isn't there. So I think their exodus from UPS ends because UPS has it organized better. And if it costs them too much money to manage those packages, they're going to go right back to UPS. I can't see how that doesn't happen because you can't have that type of disorganization with that many items that are being delivered. So structurally, the way that I see UPS, I think it gets bought. I think this is probably where we're at. I think we come back and test. This is the impulse. Now, it may take us a while. I mean, and it could roll. I mean, there's a number of different outcomes that we potentially could have here. But it's one of those generals. And I'm going to go back and you'll hear me repeat that a lot this year. The generals tell us a lot about what's going on in the economy. And just real quick, when I look at this, see, this is an outlier for me. When I go look at FedEx, clicked the wrong button. When I go look at FedEx versus UPS, they're the same industry. Why are they so different? Who's right and who's wrong? Well, just like FOMO extremes or fear of loss extremes, my assumption here is that the market is wrong about UPS. And that's my 2 cents. I'll leave it there. All right, let me jump to MOS. Now, this is more of a sector-specific kind of thing. I just like the look here. I reject it. As long as we don't close below this $22, it's just consolidation. It's, we have this band that's right here. It's what a stock does sometimes. And the question is, what I like to know is, when am I right? When am I wrong? So in this case, I think the buyers do show up here. Seen it in prior, pieces on the tape. However, really, when are we wrong? Well, when this shelf breaks, let me just come in and put a line. So, and that's the way I like to, and every stock's going to be different. It's not like, hey, this is how it's going to be across the board. You have this consolidation band right down here, which is right at or a little bit lower. So we close below this 2237, then I might be wrong. Then we're probably going to go back and visit this shelf. So we'll have this consolidation band that comes out right about here. This is our next support shelf. It's a sissy, which by the way is sell side imbalance, or a BISSY. So it's both. And by the way, when those labels are on my chart, that's what I'm telling you. I'm telling you that we have some confluence between the buy side and sell side imbalance as far as the institutional buyer. So I would think that many more buyers will show up here at this level if we get down to that $16. But still, that's my thesis. FCX. Now, you'll notice that I'm drifting into metals. And when I say drifting, there's positions I want for specific reasons. FCX is copper. It's pretty much core copper play. I think copper, I don't think it'll double from here, but I think realistically, we could end up with a 20 to 25% change. And I think copper is significantly overlooked in the AI infrastructure aspect, because realize there's a lot of metals that are used there. So the 618's back around $53. I don't expect a huge amount of upside, but I'd like to hold it up to about the 78.6. And the way this structure looks like to me is I think we did complete wave one, as far as our impulse legs. So this is R1, this was R2, and we're going to get a 3, 4, and a 5. Now, what I also like about this particular tape is it honors its corrective legs. Notice how we have this A, B, and an elongated C. But in the same sense, if we go to this next drawdown that we have here, it's equality. So what I like to see is that euphoria on one side of the tape or the other, and then normalization. And what I mean by that is it's telling me that it's staying organized. And we can go back in time. It was organized here, right? And notice the euphoria that we had in this tape. We had another kind of an elongate, and then we had that normalization. Same thing here, normalization, right? That's what I see here. And this is all a big, huge consolidation zone. So I think FCX has a huge amount of upside. I mean, we could get much higher than that 78.6, but for the moment, that's the game. That's what I'm playing. I'm trying to stay on that side of the tape. All right, let's look at NTR. Getting ready to break out, peeps. That's it. It's going. So, that's why I got a position on it, because we've got this, again, A, B, C on the 1. So this is our 1, right? So this is our 2. So we're going to get 3, 4, 5, something like this. And I haven't even thrown any fibs up here. But again, when I look at a tape, I like structure. I like normalcy in the look. And what this confirms for me is that this is an impulsive move. When you have an ABC in wave 1, it almost is always a launch pad. For example, let's go back and look at this ABC here. Launch pad, right? Boom. We had this little consolidation zone right here, right? Now what did we do? Boom. It just went right through the frickin' roof. So those are things that I like to look for in the tape. All right, let's go to Geo. Now I highlighted this as sort of my pounding the table moment, and I just like where it's at. I like the history of this tape. I'm just going to go back and put this way the heck over here because it's way out in time. I'm going back to 2013, right? And, you might not see it, but, I often look at a 3-month chart, but right here. So we get back above this zone. That zone was this entire impulse, this entire drive up where we constantly tested it, and it had some extreme euphoria above. Notice that also it tested on the way back down. Extreme euphoria above that line. And where are we? This is why I like Geo. That's real simple. Either I'm right or I'm wrong. If I'm wrong, we're going to take out this sell side imbalance here. So that is a BISI, that's on the red side. So that is where our support really is for this structure. So it could go back to $11. But here again, back to risk management. This is where our position size comes into play. What is your game plan per stock? Every stock has a plan and we want to follow it, right? And then we tweak it along the way. So here, as far as Geo, my position is it's really a starter position. I'll add a little more at 13. I'll add quite a little bit more at 11 if it gets down there. Outside of that, we're just getting into that starter side of look position. So let's look at IPI. So I look at this as sort of a flat still, but I like it because of the sector it's in, right? What it is. So I think we're sort of in this, I think it's a slow grind, very much like my metals thesis. I don't know that we're going to be extremely impulsive, but I'd like a piece on this because of this euphoria up here. I mean, I'm not recalling exactly why that was the case, but that's my thought on IPI. PEPG. Not really doing what I'd like it to do, but it's still done nothing wrong as far as the structure. We've gotten our wave 1 in. Very impulsive look. Really didn't get the follow through that I would have liked, but it's done nothing wrong. So if this is wave 1 and 2 is in, wave 3 and 4 will be up here. So we're going to look at it maybe back at $15. Well, realize it's only $5 here. Got a nice little upside. Plus the options aren't too bad on that puppy. Which, by the way, I'm stayed light on the options going into year end. I do that every year. I do a lot more common shares just because I don't want to have to manage it. And I'm thinking about position size and management with that in mind. So, all right. Bristol Myers. I don't know, those of you remember when I was talking about this right here at 45, 46 bucks. And I was like, this thing's going to come back. It isn't one of my key generals, but from the pharmaceutical side of the market, what we had was an outlier kind of event here that occurred because of Trump's comments about pharmaceutical and drug costs being dropped. Well, the reality is they can drop them, but we're going to lose the development of future drugs. And so anything there, in my opinion, is short-lived. So this, the way I see it is we've already gotten wave 1, high and tight, which is really impulsive. So we've gotten, in this leg, this was our 1. So we're going to get probably a 3. Where's ours going to be? I'm over here just looking. So we got that BISI right there. So it's going to be pretty close, maybe about 56 bucks, I would think. And then we're going to at least test this, or we're going to fully extend and get up to that 3 that I marked initially. That's my thought. I've got to speed up here a little bit because I'm not half through my CIFR. All right, this is sort of my piece in crypto, or this in coin is where I'm really focusing on as far as stock. Not that I don't like Monster here or MicroStrategies, I keep calling it MSTR. It's just as crypto, I don't know what their margin call number is for what they've borrowed, even though they've raised a buku of money. I don't know what that number is, so that's an outlier kind of event for me. So as long as Cipher holds this 1288, I'm interested. I lose interest, it breaks below. The reason is because you have a huge sell side imbalance over here. So it's sort of my way of getting a piece on in the infrastructure of crypto. I don't think I'm going back into the other miners. I think I'm going to stick right here with Cipher and then stick with coin. Outside of that, I don't think I'm going to add anything else, but I do think this is, unless crypto just fails here, and I don't see how it can with the government jumping on board now. Now, if the government doesn't buy Bitcoin, we're in trouble. So then, from a risk management standpoint, we just need to recognize that if that event occurs, we're going to take a bath. And I'm going to go back to Paul Tudor Jones. If you're worried about a position, maybe that position's too large, because you should be comfortable every day going back and looking at that position. Hey, if I take a total loss, am I okay with that? Well, yeah, you should be able to say that. So when you set up your risk management, that's something you want to consider. So that's my look at Cipher. Jump back to, where am I going now? BX. Now, Lux Algo disagrees with me. I think this is just a consolidation. It really is probably a WXYZ pattern here, even though the count doesn't reflect that. So we're going to get something like this, and then we take off. I'm perfectly willing to chase this just because of the potential for a breakout as far as that look. That's my thought. Grail, I'm a little upside down on this because it's pulled back, but I have not trimmed further on simply because peaking drive 1, peaking drive 2, we will get a third one. The question is, does it become a head and shoulder? That is the failure of 3 peaking drives. So if we get a head and shoulder, as far as this look here, so this would be our left shoulder, this would be our head, and we get something maybe like this with our right shoulder, and then we fail. All right. So the way I see this is I got this back test as my insurance to exit if it does. So we should get a bounce somewhere. I would think at least to this shelf. So right now my position size isn't enough where I'm concerned about it. So that's how I'm looking at that particular name. All right, deer. Now I'm taking heat on deer, but I want a piece of deer because I think it recovers. I think it comes up with something in AI. Too much is going on in the development of farming, and they have too big of a piece. And they have that internal financing structure they have that not everybody else has that big of a boat. So deer is one of the generals. It's just not getting out yet. I'm not really upside. Done nothing wrong. Looks like wave 1 is in, but that's the structure that I like there. I want a piece of this going into the new year, because if we do have a huge rally, this is going to be a name that just goes, and it's going to take off. It's going to go, and we'll get back to about 525. So I feel safe with the general. Where am I wrong? Well, I start getting wrong at 468, but the reality is I'm totally wrong below 448. All right, let's go to BBAI. Again, this is sort of my AI play. This one is not working. Very much like Grail, taking a little heat on it. But I look at this very much like that WXYZ pattern is sort of my thought, which means it's just about done, or it should be, sort of that consolidation zone that we're in. So I would think that this is where we are. However, we take out this low, I'm wrong, and I will cut that position. We get down to probably even 510, I'll trim it from where we are, but I'll be totally out on that if it breaks 5. But right now, that's sort of part of my AI play, because there's really not, outside of the Mag 7, there's really not a lot of places to put capital for AI that, at least my opinion, yet outside of the infrastructure side. But we'll go into that in the next couple of weeks as we get closer to the first of the year and look at the models and everything that I have laid out here. Now, Mobileye is just testing this low here, and I'm going to stop out where I have been stopped out of that. So at this point, that's a dead duck as far as I'm concerned. Hackett, because that did fail, and we are going to have failures no matter how perfect we get. Nice. I mean, just continuing to grind higher. 50% back was the game here. $25. I'll leave it there so I can speed up just a little bit. SMR, we've broken that lower side of the flag. So this probably is a 5, and we have broken below the shelf. We closed below that shelf I will close out SNR as well. I'll just take it off. I think I already reduced on it about earlier in the week. I'm not remembering specifically this second. It doesn't, that wouldn't be correct. When I was talking about a failed three peaking drive, this is a good example of what it looks like. It could test all the way down to $4.90. It actually looks like a decent short right here. Broken that shelf, continuation. Equality is probably going to take it down to $11. Looks like a decent short, actually. I didn't notice that when I looked yesterday. Cisco consolidating up here. Again, peaking drive 1, peaking drive 2, unless it's going to fail. I also like the numbers on Lux Algo to the upside. Huge divergence. So most likely, if we get a pullback, it's just going to make it more of a launching pad. All right, let's look at coin. And again, this is sort of my crypto play. If it breaks below this shelf, I might cut back a little bit. That's pretty much my thought. I want a piece on there because I do think the government announces buying. OKLO, I trimmed yesterday. Probably going to trim again. Looks kind of like an impulse to the downside. And really my thesis going into the year end is staying whole so I can trade tomorrow because we're going to have better trading days tomorrow when it comes down to year end. So a good possibility this gets back down to $41. And actually, after I finish this video, I'm going to go look at whether I want to trim that now. AAOI, now I regret not taking some profits on that one because we've kind of dumped. We're below this shelf right here. So I'm probably going to trim that by the end of the afternoon as well. I'm not going to close it simply because of the way the structure looks. Peaking drive 1, peaking drive 2, peaking drive 3. But here again, year end, it's staying whole, trying to stay positive into year end, holding the gains that you've had for the year. So AAOI is on the list of potentially trimming, and I'll look at that just before the close. Oracle. Now, probably going to cut that one as well. We do have a little weakness coming into the market, but we're clearly below this shelf. Next band is way the heck down here, so I'm going to be clearly cutting that one as well here. So maybe down to 145 is where we're going. It actually looks like a decent short. ONDS. Disappointed in how it's responded, but I want a much larger position in because again, this is that WXYZ path. Probably bought it a little late. Hey, it's what it is. Half of it is when you see it and can actually trade it. And then I think the hardest thing in this business is waiting for your setup to play out versus when you see it. So I think that's what we're looking at here. So we could get a pullback to $6 here structurally, which is sort of my thesis in entering this that, hey, I'm in here. I was trying to get, we got a little rejection right around $8. We're pushing that number. I'm going to add right here on this shelf. That's my plan at 659. And then I'll add again down if it gets back to $5. AMSC. Now that was one of the names I took 50% off this morning, half of it, because I didn't like the way that semis were responding. And what has it done? It started to fail. That hasn't broken below that 28.78, but that is the reason I cut that back. Now, Dash, I'm regretting. I thought twice about adding more than I did because I did add to that. And the reason is because the structure, I think it's heading back to the upside. I think we're building out one, but I think it gives me another chance, another shot to add to it. Maybe 50% of that candle, this shelf right here. Looks like a nice good spot there at 214. I would think that would be the case based on that look. So I'm looking at this as one. Maybe we get a back test to that 214, and we'll probably test the top side of that resistance, and then we're up and out. Then we have all-time highs heading into Dash, which, by the way, they just became profitable. Now, AST, I've got covered calls on AST Space Mobile, and, on a third of the position I have left, I took some profits. Actually, I wish I'd taken more because it's kind of given it back. Pretty solid rejection. However, again, it looks like a WXYZ pattern, and this is one of the stocks that I want to hold because I do think it has material upside with space as a service. So, sort of looking at what this might play out to be. So, I get below this shelf. This needs to hold right here. $60. I might change my mind at that point. All right, let me go to our requested list, and we have a lot of names here. We did Oracle. Let's look at Sound. Really done nothing wrong. Again, another WXYZ pattern here as far as the look. I don't like trading the middle of those, but sometimes you have no choice if you want the name or the sector kind of thing. So it would be something like this is what I would think. So I would think that we come this wick hole, this shelf really, I mean, we could you look at your sell side imbalance here. It's a very euphoric take. So the band here for the sissy is way down here. So 50% is a logical spot for it to go at 945. That's my thought. But be candid, unless you want to hold Sound, you probably have quite a little bit of time to add to it at a later point. That's sort of my thought about it right at the moment. PDYN. I hope you're not still holding it. It broke down below that $5. Lux Algo says 291 maybe. But again, it's pretty clean ABC structure. I mean, it's going to come out of that. Depends on how patient you are. This is the ABC structure that I see here. So equality is probably right there, right where that 288 is. And then we should get an impulse leg back out of that. I mean, it could still get stuck in a flat kind of thing, but I would think that it gets back up out of there at some point. All right, let's look at team. Nice base here. We're really testing this zone is where we are. Got a little history on this for right here. Noise off of the shelf. So this is some sell side, buy side imbalance. And those where our wick is. I mean, perfecto. The technical analysis there, everything, you have some confluence. I like it right here, right here. Matter of fact, I'm going to circle it. I'm going to look and see whether I want to add a position, dig down a little bit deeper, but I think that is a good spot to try a piece right here. So impulse will take us out. Maybe something like this, I would think. So the next question is, when are we wrong? Well, it closes below this wick right here, which is, where is it coming at? Roughly 137.56. Then I lose a little interest. Otherwise, it looks good. Thanks for bringing that to my attention because I had not looked at that. All right. GLXY. Now I've got all kinds of stuff drawn up on here. It's this number. I think I was looking for the 4 here. And mostly it's because where this band is, and also it likes to give it back. MO of the tape is very important. It does like to give it back. G4. Look at the equality here, and I'm going to just use the breadth and size of this corrective leg as the example here, and I'm going to steal it and move it over just because structurally that looks similar to me. It's going to let me, So I mean, how perfect is that? Jeez, I didn't even measure it over here. I measured it over there. And look at this. Our A is here. Our B is here. The most likely outcome is a C. That's my thought there. In other words, trim, FLR. Out. Looks like we're going to reject here. Looks like a clean ABC to the downside. Wait, that is just a huge sell candle. Quality is back down to this band. You have a lot of confluence. Sell side imbalance. Look at this sell side imbalance here. Look at that second dump right there. That's the big one right there. That's the big one. Where are we? We came right back in it, tested, popped out. So now it gets here. I get real interested at 31.62. I don't know if you've guys have started to figure out my MO with how I look at a chart or look at a stock. All right, this looks like a round trip to me. Don't like that. Don't like that look. Not at all. No. ABC, that shelf is broken. And you'd think with copper doing so well, it wouldn't have done that bad. ABC is way the heck down here. Yeah, don't like that. Sell side imbalance over here. This looks risky to me. I mean, this is where our shelf is. So, maybe at $39. And I'd have to really look at the micro. Why are they doing so bad when FCX is doing so well? That's my first question. So I don't know the answer to that. I'll have to dig into that. That's one I'm going to circle and look at because I kind of want to know. SYM, we did that one already, I believe. So we're going to look at Jimma, and that is a name that just keeps popping up. It's gotten up and out of that base, that's for sure. One's done. Wave 2 looks like it's complete. So impulse will take us back out of this. And what's funny is some countries are doing really well with what China's. And if I'm right in my memory, I think this is an African company. So 3, which should take us back up to about $72. Good hold if you have it. INDI. Still really done nothing wrong for the impulse. So, I would think that we'd get some kind of structural like that. Breaks below, I'm wrong, below 319. And, there was something going on with the Indian currency. I'm not recalling exactly what that was. I aligned that when I talked about China and BOJ selling off on equity. I think they're both downside risks. So I right this second, I'm not recalling specifically why I had an issue with India's currency, but my recollection here is it wasn't a positive thought. So, all right. Confirming trend support here. Now I'm going to point something out. Notice the wick here. Notice the wick here. Notice the body here. And notice the body here. So what is the most likely outcome? And I think we've discussed this a number of times where I drew a descending wedge look, from here, where I said, hey, now this is likely what the outcome was. And it looks like that's pretty much right, as far as the look. So, we have this zone. I mean, and it drifts way out in time. So, we could be stuck here for a little while. Not really excited to add until it gets back down to that confirming trend support. Yeah, then it's worth the bounce for a 50% back shot. That would be my thought. Okay, ENVX. Let me just go back. There was a quick question on that. So ENVX, I like it at 543. IONQ. Now we have a number of potential outcomes here. None of them are really positive. If it is an impulse, we're going to end up back down here around $28, which is why I closed the position. So I'm out of that because this failed right here. So and my breach was this shelf. So once it cleared 47.33, I was out. All right, let's look at JOBY. And, structurally, I think this is our impulse, the way the impulse leg looks. So we should have bounced here. Excuse me, we did bounce. We're projecting price here. So I think we're going to head back down to about 1130. So that's where I have my alerts set. Let's look at OSCR, and which, by the way, I like that longer term. That is a position I want to build just like Oscar. The challenging part is what the structure looks like. It looks like a broadening pattern to me right here. So, this is kind of the high side. This is kind of the low side. So equality to me is back around this shelf right here, around 915. So this kind of rejection here, we got in here. It looks like an impulse down instead of an ABC, which tend to be ending diagonals, where 4 is broader than, and it puts me right back down to that shelf. So my interest in alerts are back around $10. Oh, where were we at? Oscar. Oh, we already did Protein. Pfizer. This is a huge list, guys. We're going to try and make it through it. We're right at an hour. So we're all right. Pfizer. I think we're good. Confirming trend support. I've got it anchored at 2092 and 2364. Until that breaks, there's nothing wrong. MSTR. Rough look. Buyers should show up in this zone right here. Problem is, leading diagonal is the structure here. So that means we have a broader 2, shallower 4, which is flush. Most likely outcome $65 from where we are now. I don't know that I'd be taking that chance with the heat for this shelf the way that it is. There's just a huge void. Notice this wick sell off here. You got history of selling right here. So the body of that candle puts us down to $107. It's actually a beautiful short. I'm actually going to look at what the cost of contracts are on shorting because it looks like a good short. The problem is that it's going to kill crypto. So, and XRP dropped below $2, which took me out of half of my position. So let's look at Charter. I believe it's Charter. Yeah. Nice base here. The challenging part is, are we actually done here? And that, you look at sometimes you have to go out in time and look at it. We got this broadening formation to the bottom. So it's going to get more euphoric on the way down, right? So your shelf 3 is down here around 168. That's got to hold. It broadens and takes that out. It's going back to this shelf. It's going back to $78. So that's the concern there with that. All right, let's look at Sentinel-1. Still no, I think it's done here. No, I just don't want to hold that risk with the way this market is. It's where I'm at. I can always buy it back. Real simple on my other setup, I believe I have my confirming trend support line set like here with an alert on it, which you can just do. It gets back above then think about it. You don't want to think about a full position size till it's back above about $19. That's just my take on the way the chart looks. It's always what the tape tells me as far as the history of buyers and sellers. Let's look at Irene. I think I'm pronouncing that correct. It'd help if I got it right. Rough looking tape. Looks like a full reversion to the mean for me. We got to hold this shelf. 26. Otherwise, it's going back. I don't like the look at all. I put a confirming trend support to try and add that back there. So I'm looking at this. This is the rough part. Reversion to the mean is totally in play. Could go back $5. That's, honestly, this next line breaks. This whole candle's tradable to the downside. $33 down to roughly $26 for continuation to the downside. ORIC, boom, it just gave it up. One reason I don't like pharma. Flushing Drive is my first thought. Flushing Drive 1, Flushing Drive 2. Where does that put the third one? This thing has room down to $1.58, which I get interested in buying that. God hope you've held it since $11 because it's probably going to take the shelf out. Best place you're going to see buyers first shot is at 587. Pins. Beautiful look here. I actually like it. Higher low. Buyer's shelf is just below there. Only thing I don't like is that candle. That one right there. Just looking to see what it does. Really doesn't have that here. It recovered there. But we did get a sell-off. So this was more of a recovery look than this. Ooh, it likes reversion to the mean too. That ain't a movie thing. More like here. So maybe one more leg lower. 3 flushing drives where it measures. I'm going to count that as 1. So I'm looking at this as impulse leg down. So, it is a ending diagonal, which is good. So this is A. We should get an ABC right behind that. Help if I click the right tab, maybe an ABC like this here. Then we should get another leg lower if that doesn't hold. But I do like the look here with this consolidation, sort of a descending wedge. It's got to get back above this 27.92. Gets back above 70.92. If I want to add risk, that's where I would add it. Otherwise, my opinion is wait. Kava, like the look down here. Full reversion to the mean, pretty much. You have one buyer demand zone down here. So I'd wait and see if we get $38. Gets back above 55.81. Then I might go in that direction. Let's look at AVA. This is clearly a XAVC pattern, in my view. So potential. I got this noted at 129 for it to come back here. That's my look. I would wait for that. Too much risk there as far as my look. ESLT, nice euphoric look. This has got a lot of upside right here. A lot of upside. Look at assuming that is an impulse leg. Peaking drive 1, peaking drive 2, peaking drive 3, high and tight corrective leg, broke out new high. Just looking at it from an ABC equality standpoint, assuming this is A, this is our B. C puts us up here at $850. Beautiful look. Excellent pick if you're holding this. Even the potential for add if you want to. MACD just crossed up. RSI's got plenty of room to the upside. Nice look. I just circled that one. Look whether or not I want to add that. I want to look at the macro, the numbers, what the options look like, and then we will decide whether we want to add that. That actually is a beautiful look. All right, so potentially a APH. It's like an ABC here. So usually after you get an ABC versus an impulse on your 1, you get a decent corrective leg. Kind of have that though, kind of a double top, probably an impulse. What I'm saying here is this is my A, this is my B, and this is my C. Kind of equality. So Fibonacci's attaching that to that look. So if we're looking at this structure, we are going to come back probably at least to the 382, 110, where I get interested. Lux Algo agrees. Buyer shelf is right there around 116. Looks beautiful. All right, folks, I think I covered everything. One last call. I'm going to check up on my messages here. This will be our last recap before Christmas. So Merry Christmas, Happy Hanukkah, Happy Holidays. I will be back January 26th just for a minute, only because I have some stuff that I trimmed, so I'll check in with any messages at that point. But I am running right through the 19th, so the rest of the stuff that I post, and we'll get the end of the week stuff done so you guys have something to look at. Outside of that, I'll be back full force January 5th. I'd appreciate it if you join me and support my work. Outside of that, happy holidays and great trading.